Have a look at how the dividend announcement from BPCL will have an impact on the cash market price as well as the FNO segment. Firstly, let me just highlight that where BPCL closed yesterday in trade was at 472 rupees, and they have announced a total dividend of 58 rupees. Now this means that the dividend is approximately 12.2% of the market price. BPCL has a market capitalization in excess of 1 lakh crores, and therefore the total dividend amount that they have declared is in excess of 12,500 crores. The government holds more than 50% stake in the company, and therefore the government itself will get dividend of more than 6,600 crores. So that's the positive for the government. Now coming to the technical adjustment of the price of this 58 rupees. In the cash market, 58 rupees will actually be deducted from the spot price as of the X date. But the big impact will come in the FNO market, because 12.2% of the current market price is above the 5% market threshold that has been decided by the exchange. Let me just highlight what the actual technical adjustment will be. Now, dividends which are below 5% of the market value of the underlying stock would be deemed to be ordinary dividend, and no adjustment in the strike price would be made in case of an ordinary dividend. In case this is an extraordinary dividend which are above 5% of the current market value of the underlying security, then the strike price will be adjusted. So this will be actually applicable to BPCL. Now what the extraordinary dividend is and how is it going to be adjusted in terms of the strike prices of the options, let me highlight that as well. Now to decide whether the dividend is actually extraordinary or not, which is exceeding 5% of the market value, the market price would mean that the closing price of the scrip on the day previous to the date on the announcement of the dividend is made by the company after meeting the board of directors. However, this will not be applicable because the dividend announced by BPCL was post-market hours, and the rule for that goes as follows. In cases where the announcement of the dividend is made after the closing hours of market, the same day's closing price, which is 472, would be taken as the market price. Further, if the shareholders of the company in the AGM change the rate of the dividend declared by the board of directors, then to decide whether the dividend is extraordinary or not would be based on the rate of dividend communicated to the exchange after the AGM, and the closing price of the scrip on the day previous to that of the AGM will be considered. Now, in case the dividend is deemed to be extraordinary, the total dividend amount would be reduced from all the strike prices of the option contracts on that stock. Now, this is the important point that I want to highlight. Let me highlight once again. In case of a declaration of extraordinary dividend by the company, the total dividend amount which is need to be reduced from all the strike prices of the option contracts on that stock, and the revised strike prices would be applicable from the ex-dividend date specified by the exchange. So in a nutshell, let me give you an example. In case you are holding a 500 call option on BPCL, then the new strike price will actually be 442, which is after reducing 58 rupees from that strike price. And of course, this will all be applicable from the X date that is announced on the exchange. So every strike price, this was just one example that I have highlighted, for every strike price that trades on BPCL, there would be a reduction of 58 rupees from that strike prices going forward.